Today's video is for every single person out there who is looking at this market and thinking to themselves, am I an idiot if I buy stocks over this next few months? Am I going to be a genius if I buy stocks over the next few months? And wondering all those sorts of questions, okay? Today is a video to ease a lot of people's minds. I have some extremely important things to show you in today's video that honestly, I'm not seeing anybody talk about. I watch 1 million hours of CNBC a day. I don't see enough people talking about these sorts of things. And I'm I feel like people are totally missing these monumental things that are going on right now. Changes with CPI data, the way these things are being reflected, the flush of government money that's about to come out there right now that we need to talk about, okay? And these are huge subjects that I'm like, where are people talking about this? It's like back page news, and instead they'd rather just gossip around if the market's going to 3,700 or 4,700, and I'm like, what is going on here, guys? Let's actually get into this a little bit. And so today's video is that we're going in depth, we're going detail. I'm going to show you some stuff that, like I said, people just aren't talking about, and they need to be, because this is what's going to change interest rates, what the Fed's doing, and ultimately where stocks and earnings are going as well. So hope you guys can get a lot of value out of today's video. If you know somebody that's really into the markets, share this video out with them, because there's a lot of things I'm going to go over in this video here today that definitely folks need to be aware of, okay? So I appreciate every single person that is subscribed to the channel. By the way, before we get into the video, 2 things here. One is everybody in the Patreon squad. I just posted the new stocks I just bought. I bought 1 growth stock, 1 dividend stock, and 1 value play. If you're interested in joining the Patreon, it's like $2 or $2.50 a week to join in there, and you get to see all my buys and sells in that particular portfolio there. So if you're interested, that'll be in the description area. And also for everybody else that wants the deal that's coming up for the massive epic Valentine's Day once a year sale, that will be in the description area. It might also be pinned comment if you want access to that deal and want me to send it over. These are all the course videos you get, including some of my favorites ever: how I value a growth stock, right? How I model revenue and net income, valuation studies, running revenue projections on a stock, how I value based on growth, all the dividend videos, the fundamentals of stock investing. So that's a no-brainer course. So if you want access to that and you don't have access to that yet, check out the pinned comment down there and we'll send over the deal as soon as it drops, okay? All right, so O-Man posted this inside the private stock group under the breaking news tab. I thought this was extremely important, okay? Hardly anybody's talking about this. And I even typed it in on Google because I just want to see how many articles are even being written about this. And it's some obscure websites are even talking about this. I'm like, how are people missing this? This matters in the biggest way, okay? Important. December was the last CPI print that was calculated using the current methodology. Next CPI print will be the first report based upon the new methodology. CPI was formerly based on 2-year consumption data. Now CPI will be based on single-year data. Okay? Then you say, that's the government being fishy. They're going to make CPI look really low. Yeah, but at the end of the day, it is what it is, okay? And so the bottom line is now, instead of looking at the previous 2 years, it's only going to be looking at last year, okay? And wait till I take you through how much pricing difference has come down on so many of the most important commodities in the world at this point in time. So one of the biggest worries from folks out there is, CPI could come in hot, in 2023, which means the Fed has to keep raising rates, and it scares a lot of people, right? Because that would mean likely stocks go a lot lower. But if you're worried about that, I'm just about to show you, you don't have to be so worried about that nonetheless, okay? And by the way, thank you, O-Man, for posting this. If you don't know O-Man, he's the one that he's my right-hand man in the private stock group, and he literally is the one that you have to talk to if you even want to join the private stock group and the private wealth group. And by the way, if you're interested in applying to join us in there, that will be the pinned comment down there. But yeah, he's a man. He has so much knowledge, it's disgusting. And I just appreciate little reminders like that, because that is absolutely huge, okay? Look at commodities here. Look at where crude oil was last year. Look where crude oil is right now, okay? And think about what CPI numbers are going to be coming in at this spring and the summer. When we're talking about oil prices, we're here. And oil prices will likely be somewhere, if I had to guess, this spring and summer, it would be somewhere between, I would say, 70 on the low end and probably 90 on the higher end, okay? And so that's significant. Look at natural gas. Look where natural gas was. And where do you think natural gas is going to be over the next several months, right? This was because of the massive disruption, obviously. We all know what happened there, right, in Europe, right, that insane disruption there. And now, at this point in time, look where nat gas is. Now, is it going to stay at $2 forever? Probably not. But a $3 to $4 to maybe $5 range is very realistic for nat gas versus when we were trading at, $6, $7, $8, $9 for natural gas. This is the comps we have over the year. So if you're planning on CPI coming in super hot and the Fed's going to have to raise rates through the roof, you need miracles. You need literally miracles, and you already got miracles last year. So if you're thinking you're going to get 2 years of miracles, very low probability, right? A stock I own, Oatly, had got devastated last year with their margins because oat futures literally went to the moon, right? And look at the price of oats. Look at the price of oats, which are normalizing now at this point in time, right? Look at the price of lumber. Lumber is down epically. Think about these comps year over year for lumber. Oh my gosh, it's like night and day difference. I mean, we're talking 66% down. No, if you're wondering why home builders keep going up and you're like, well, the real estate, and we're going to talk about the real estate market later in this video, but if you're wondering why do these home builder stocks, they keep going up, right? And you're looking at this and you're like, I don't understand, like the housing market's not strong right now, real estate's not strong, it might not stay strong, right? And we'll discuss that later in the video, right? If you're wondering why those stocks keep going up, I'll tell you exactly why those stocks keep going up. The bottom line is for those companies, a lot of them have these big backlogs, and they sold homes to folks at very high prices because a lot of this backlog is from people that ordered homes at the end of 2021 and in the first 6 months of 2022, okay, as well as the back half of 2022 as well, but the first 6 months was heavier, right? And so people paid these sky-high prices for homes. Well, now look at the price of lumber, for instance, right? Which is the most important product and usually the most expensive product that goes into a home, right? As well as pricing for everything else has started to moderate or actually come down significantly. So in terms of the home builders, do you think they're magically just going to give their customers like a kickback on that? No, they're going to keep all that margin and that profitability. And so with items like lumber, for instance, coming down quite substantially and them selling home prices here, don't be surprised if home builders report potentially some of their best margins in their company's histories, okay? And so when you see those stocks rallying, it's like it's a weird situation because it's like real estate's not strong right now. Why are those stocks at or approaching record highs? Believe me, man, their profitability this year will end up being pretty dang silly, okay, because of everything that's happening on the inflation front. Wheat, look at the price of wheat, right, over the past year. And you had wheat obviously go to the moon along with every other commodity out there. Now you got to comp that. You got to comp those numbers year over year. Give me a break, okay? Look at copper. Now, this is very interesting with copper. Very interesting. One is, in terms of comps there, we're kind of in line, right? But something significant happened here. Look at how copper fell off a cliff. Now, copper is usually a leading indicator for recession, right? And if you think about this time, this is around the time period that we really entered a recession in 2022. The government didn't call it that, even though we had several quarters in a row of negative GDP, right? Even though consumer confidence was the lowest we've seen it pretty much in ever, literally ever, right? And everything was going bad, right? And yet, the government didn't call it a recession, but copper led you there, right? And clearly copper has come back quite strong here, which basically copper is telling us actually, don't expect recession moving forward now at this point in time. Now, we can't say for sure if copper is right or wrong, but that's basically what it's saying now at this point in time, right? And so copper has just always been a kind of a leading indicator of how the economy is doing overall, okay? Now, if we look at inflation data, we're now down to about 5.32% based upon Truflation and how they run their numbers, right? So we're headed to the fours, baby. And obviously the government data lags, so everything you see on here you won't see likely for a month or two, maybe even 3 months from the government data because we know that all lags, okay? But what do you think is going to happen as soon as we head to the threes, okay? Or go under 3 as far as inflation, which I think we could be under the 3s by summertime, believe it or not. If you just look at now the methodology change, where we're only comping against last year, and you're thinking about where pricing was for all these different items last year, think about transportation last year, right? Corsair just talked about on their conference call, right? Pricing for containers came down in this previous quarter 70% year over year, 70%, okay? So we're headed to under 3. We're headed to under 3. It'll probably take us 4 to 6 months to get there, but we're headed there. What do you think is going to happen as soon as we get down to the 3s? What's the Fed going to do? Well, the Fed's going to look out there, and as soon as they get any sort of data, like unemployment ticking up in any sort of way, right? Or some sort of bad economic data, as soon as they see that, cut. As soon as they see it, because we're going to likely be at, let's say, a 5%-ish Fed funds rate at that point in time. So they'll use any data. Once we get under once we get under 3% as far as CPI goes, which is very realistic soon. Once we get under there, I'm telling you, they're going to be so ready to cut. As soon as they'll use any excuse to cut. Anything comes out even remotely bad, and it's like, oh, we saw this, so we're going to cut. Inflation's under 3% anyways. We're back into the 2s where we should be. That's the way it's going to work, okay? And what do you think is going to happen as soon as they start cutting rates? I mean, obviously, that will be a very good thing for the real estate market and for many other things, including valuations, because then, the lower rates are essentially, the more you're willing to pay for stocks. That's the way it's always been, right? Now, I want to take you guys through a few things in the private stock group's investor report that T-Man put out here today, okay, that I think are very important to just kind of take a peek at. And we produce this report every single Friday for everybody that's in the private stock group and private wealth group, okay? First one up here, Michigan Consumer Sentiment. The Michigan Consumer Sentiment reads 66.4% in February, up from January's reading of 64.9. That's up 2.3% month on month and up 5.7% year over year, okay? Now, consumer sentiment is starting to get in a lot better place. Why is consumer sentiment, why are Americans feeling a little better now than they were? And by the way, they're still not feeling great. Let's be clear about that. That consumer sentiment is still a low number compared to usual, okay? But it's way off the lows. When we were last year in the summer, look at the numbers back in the summer and the fall time. It was, and even in the springtime, spring, summer, all the way through fall, consumer sentiment was around the lowest. Literally, it's been in the history of that survey, which goes back 50, 60 years, okay? Why are consumers starting to feel a little better? Well, because they're likely seeing some sort of wage uptick, let's just call it that, right? But not just that. Inflation's actually started to cool. It was not a good feeling when everybody was watching gas prices go to the moon and everything was just flying high, right? Consumers started to get very, very worried about the future. And now at this point in time, consumers are feeling a lot better. And if you look at consumer sentiment, how bad it really got last year, we're talking, we went all the way down to levels below the great financial crisis. Think about that. When we had unemployment near 10%, when, it was just devastation, when we almost lost the banking system, when the stock market indexes fell 50%, right? We went lower with consumer sentiment because inflation got that out of hand last year and people were feeling that scared about things that they just were like. So the bottom line is, if you're expecting consumer sentiment to ever go back down to those levels, there might be a day, but it's not going to be anytime soon. That was about as bad as it could possibly get for that. No, that wasn't about. That was the worst, right? I mean, we're talking about consumer sentiment was lower than in the 1970s when you had super high inflation for a long period of time, right? That matters in a significant way. Also, what matters is CEO confidence as well, right? The Business Council stands at 43 to start 2023, up from 32 in the final quarter of 2022. So in terms of CEO confidence, it's starting to improve. I'm listening to these conference calls, and I'm hearing more and more CEOs basically say their businesses are coming in ahead of schedule. Wynn's conference call, Wynn Resorts, pretty darn good. No one's insanely confident right now. It's not like anybody's like, oh, our business is the best it's ever going to be. Like everybody's kind of like cautiously optimistic because the numbers coming in. And PayPal, CEO basically said on their conference call, right? Let me pull that up for you. I think I had that on the breaking news tab there. This was from the PayPal CEO. This was their direct quote on that conference call I was listening to last night, right? He says, our Q1 is off to a much stronger start than we anticipated. That is his direct quote, okay? Our Q1 is off to a much stronger start than we anticipated. That's something that is very good to hear from somebody that leads a payment company that owns PayPal and Venmo, right? And just these are very important things to take into account, and CEO confidence matters, okay? In terms of real estate, we're still very high in terms of mortgage rates, right? And I'm not bullish on real estate in 2023. I wasn't bullish on real estate last year. I'm not bullish on real estate this year. Okay, I think 2024, 2025, I'll get more bullish on real estate. I wouldn't be surprised if I actually buy a property myself, a new real estate investment property, either at the very end of this year or actually in 2024 at some point. And then I'll probably buy another real estate investment property probably toward the end of 2024 and maybe the beginning of 2025, okay? But nonetheless, in terms of real estate, mortgage rates are obviously still very, very high compared to where they're usually, they have been at the past 15, 20 years. And, this is something that's going to hold back the real estate market for a while here. Don't expect real estate to go sky high. I think there's a lot of people that are starting to see the stock market coming around. They're starting to see confidence coming around. And, there's a lot of people thinking automatically like real estate's going to go to the moon again or something like that and prices are going to skyrocket. They're not. Not anytime soon. Real estate's lagged big time. Real estate looked great while the stocks were getting destroyed, right? And vice versa is going to happen. Real estate's going to continue to be in a very hard place, a very tough place, while the market can actually bounce back and earnings of companies can actually bounce back quite strong, okay? Now, something I've been concerned with the real estate market is I look at these companies' backlogs for the home builders, right? And if I think about their backlogs starting to dry up, second quarter, third quarter, 2023, how there could be some job losses there, manufacturing could get hit. The more and more I thought about that, I'm like, yeah, I can definitely see that being a possibility, but we got to remember, the government is pumping money out there like crazy over this next couple of years for infrastructure spending. So the bottom line is, if you were to lose a job, let's say you were building homes and that opportunity is not there, believe me, there's going to be infrastructure projects going on everywhere, okay? The White House, this is back from November, the White House says more infrastructure spending is coming. Listen to this, okay? The White House on Tuesday said it had, and this was back in November, obviously, right? Had pushed out $185 billion. $185 billion. You can build a lot of streets and new highways with that money, okay? In funding under the $1 trillion bipartisan infrastructure law passed last year, which they're talking about 2021, right? And I think that passed very late in 2021. And the same amount or more will follow in 2023. So the bottom line is, the government is spending like crazy on infrastructure right now and is going to for years to go in the future. So if you're thinking about construction jobs drying up in real estate or something like that, like I'm concerned with, I'm telling you, there's going to be a lot of construction jobs that are going to be state funded and government funded now at this point in time. These infrastructure bills are epic, man. And so even I was thinking about a stock like Caterpillar, and I was thinking about some of the weakness that could come in Caterpillar from if real estate slows and continues to be in a slower market for the next year or a couple years. But at the end of the day, for Caterpillar, they still have strong demand because guess what? If you're going to, build a bunch of new bridges and, fix a bunch of highways and fix a bunch of streets and, fix sewers and all this stuff that is corroding around the United States, right? Well, guess what? Caterpillar is going to benefit as much as anybody from that, right? So even for a stock like that, I'm like, gosh, I kind of want to be bearish on it, but it's hard to be bearish on it when the government's got this flood of money that's going to be coming for years to go. It's not like this is a one-year deal. This is like years and years and years and years of just like, here's another $100 billion, here's another $200 billion for this infrastructure. And for somebody like myself, like I live in Las Vegas, right? Mostly. And in Las Vegas, like this whole city's been built in like the last 30 years. So all our highways are nice. Like pretty much all our roads are nice. Like everything's new in this flippin' flapjacking city, right? But at the end of the day, like not everywhere is like Las Vegas, right? Like most cities, were built 100 years ago, 200 years ago in the United States, right? And the bottom line is infrastructure is in very poor condition around the United States. It just is. And so we got a lot of work to do, overall, by the way, completely random. But if you're wondering why I'm so bullish on Las Vegas real estate over this next, let's call it few decades, as long as we don't run out of water, let's just hope we don't run out of water, okay? Otherwise, we're going to need to build a pipe from the Mississippi River or something like that. But the bottom line is, if you don't know, in Las Vegas, we're surrounded by mountains everywhere, huge mountains too. It's kind of hard to see sometimes on satellite maps, and we're running out of land to build. And like we're going to be out of land pretty much within, I would say, the next 10 years. And obviously, people always want to move to Vegas, sunny weather all the time, right? It's beautiful weather. Obviously, no state income taxes just always attracts a lot of folks, including a lot of folks from Southern California, because you can just get more bang for your buck out here. But we're running out of land, man. And where you're going to have to start building is like way out this way, because all these mountains, you can't build on the mountains. Like, that's just not possible, right? Or you're going to have to start building way out toward Boulder City, or even like south of Boulder City. So, at this point in time, like, Las Vegas real estate, I think over the next 10, 20 years is going to be looking very, very good, as long as we don't run out of water. Very, very good, because you're just starting to run out of land in this city, and all these mountains prevent you from being able to build around, where, that's not like that for everywhere. Most cities in the United States, like, you can just keep building, and just build it out further. Vegas isn't like that, man. You're limited because of the way the land's constructed. So that's just something to keep in mind there. Now, something else to keep in mind that's much more important than that is S&P 500 weights. And I went over this in a video recently, because a lot of people are worried about earnings. Obviously the market's driven on S&P 500 earnings, right? And here's what I'll tell you. The majority of these companies will see their earnings per share, their net income, and their margins increase in 2023 versus 2022. I listened to almost everybody's conference calls. I listened to what all these companies are up to, their CEOs, and the executive teams, right, and all the decisions they're making. I'm telling you, the majority of these companies are going to see margins increase and profitability increase in 2023, and earnings will increase. And this is where like the majority of these stocks are all going to have earnings go up, right? There's only like one of these stocks where I'm for sure feeling like their earnings are going to go down. And that's ExxonMobil. Out of the, and who knows, maybe even they somehow have a more profitable 23 than 2022. I think that's a hard situation there. All these companies are at a probablys or for sure's going to have better EPS this year than last year. And so you're going to see EPS and company earnings come in, I think, a much better than Wall Street's anticipating. Wall Street's anticipating a lot of these companies to report down or no growth in their earnings per share this year. And I'm just like, you guys are making a big mistake. Never mind, a lot of these companies have announced huge share buybacks. So they're going to basically take a bunch of shares off the market. So even if they had the same net income, their EPS is going to look considerably higher. These are things that I just don't think Wall Street's even taking into account right now, okay? No. A stock like I own, right? Corsair Gaming, $18,000+ move today. That's a great move for Corsair, and it's got a long way to run. Okay, a long way to run. Long way to run. I'll just put it like that, right? In regards to Corsair, what did they tell us? What did they tell us on the conference call? Margins will improve in 2023. EBITDA will improve in 2023. Everything you could possibly imagine is going to improve. Revenue is going to improve. Like, everything's going to improve for that company, okay, in 2023. And they even went in with more modest expectations, and still everything's going to improve. But it's not that hard to improve your business when you went from, paying $20,000 a container to ship your products overseas to $3,000 or $4,000, right? So that's the thing that I don't even think Wall Street's taking into account, how much these companies' margins will improve in their earnings per share. And we know the market's more, you want to know what the market's driven by even more than Fed rates? Margins, earnings per share, okay? And so this matters in a significant way. And I think some folks on Wall Street are starting to wake up to it. And that's why you're starting to see the market come back. But I think it's got a long way to go in regards to this. And this is why you have to take advantage of every dip in this market in 2023. Every dip in sight, you got to take advantage. And, it was interesting. They did this poll on CNBC. They had Tom Lee on, right? And they said, you think the S&P 500 will hit 4,800 by the year end. Still, most people are obviously not in that camp. They're not in that camp, right? Which I like. I don't really want to see everybody go to the ultra bullish side. I'd rather people still be in the denial phase or disbelief phase and those sorts of things, right? Which is, you got to ask yourself, like, how long are we in disbelief? We're in disbelief all the way until the market hits a new record. That's it. All the way into, actually, two scenarios could play out to get us out of disbelief. One is the market hits new highs, right? Which we might not get new highs this year. It might take us till 2024 to get new highs in the market, right? Because we got a long, the NASDAQ would have to go up roughly, probably close to 4,000 points-ish to get back to an all-time high. That's a long way from here. The S&P 500 would have to go up, 700 points or so to get back to an all-time high. So we're a long way from an all-time high for the markets, right? And that might not happen. It could happen this year, but it might not. It might be 2024 before that happens, okay? But that's a scenario you could get people out of disbelief. The other scenario is companies start to grow their net incomes and their earnings per share. And I think we could see that as early as the first quarter, believe it or not. As early as the first quarter numbers, which come out in the springtime, we could start seeing a lot of these companies. And then in that quarter, they're going to be likely reporting even better margins and guidance and more stability in their commentary, which in last quarter and the previous quarter, there's definitely a lot of like, we're very concerned. We don't know what's going to happen. I think in next quarter, there'll be, especially if CPI continues to come in, let's call it better than expected, right? And the Fed stops, moving as aggressively. There'll be a moment in time when I think a lot of these CEOs and executives will come in with much more certain commentary and be much more certain about their businesses, which is huge. Because remember, in investing, what's the biggest thing? Confidence. Confidence is the biggest thing. And if a Wall Street person, if somebody, a high net worth individual, whoever is buying stocks, right? If they can't be confident that that company is on the right track, right? They can't really invest like that, right? Which is why you get sell-offs. And so until people are confident that these CEOs have a handle on their businesses and are they know where they're going, they don't buy. And so once that happens, that's another way you get out of that disbelief phase and people feel like, okay, I feel good about the market again. I feel good about stocks again. And actually these rallies are lasting and it's not just a bear market rally. Because until you get one of those two scenarios, everything's just called a bear market rally. Oh, we don't know if this is for real. It might just be here today and gone tomorrow type situation, right? And so that's just something to take into account there. Hope you guys enjoyed today's video. I appreciate everybody. Make sure you take advantage of our epic once-a-year sale we got coming on, my 2 most popular courses ever. Become a Master Stock Market Dividend Investing Mastery. That'll be in the description area. And also the pinned comment down there if you want that deal sent to your inbox as soon as it drops on Valentine's Day. Thanks for watching and have a great day.